I'd like to welcome Bernie Kassar. Come on out, Bernie. How are you?
Thanks.
Bernie is in charge of customer success at Xactly, which is the leading incentive compensation platform company. And Bernie was born in the Sudan and made his way to Minnesota, right?
Yeah.
So a little change in temperature there. So welcome, Bernie. And then our next guest is Chris Sirosky, the Vice President at Dynatrace, in charge of customer success at Dynatrace. Chris, welcome.
Thanks, Jeff.
The Dynatrace is the best application performance management software. And he's a Michigan Wolverine, a longtime Michigan fan, and is at once interviewed with the CIA. So another alternative career could have been the CIA. We'll have to talk a little bit about that. So both are experts at customer success and compensation. We've got a great panel for you today, and let's get started.
You didn't tell me he was a Wolverine. I'm a gopher.
Okay. I'm Jeff Epstein. I'm an operating partner at Bessemer Venture Partners, and I'm the former Chief Financial Officer of Oracle, so we were very interested in compensation at Oracle. Bessemer is an investor in Gainsight. I personally, when I heard about Gainsight, was so excited I've invested. And a little background about me, I just came back from the Berkshire Hathaway annual meeting in Omaha, Nebraska. So for those of you who are Warren Buffett fans, we can talk about that a little later. What I'd like to do is to start with questions from the audience to get to questions about who you are. For instance, what of the people in the audience, raise your hands here, who has a significant amount of international revenue, so we can know whether we talk about that? Okay, it looks like 20% or so people have international revenue. What about significant revenue through partners? Who here sells a lot through partners? Okay, some people there. And then in terms of company size, if you divide companies between under 350 employees, 350 to 4,000 and 4,000 and up, who here is in the 350 and under category? Okay, who here is 350 to 4,000? And who is 4,000 and up? Okay, so we got a sense of who that is for, if we can, I think, tailor our comments to that. Great, well let's start with Bernie. You'll tell us about customer success and compensation.
Absolutely, thank you. So I wanted just to set the stage about what we were planning for our FY16. When we looked at our comp plan year, we really wanted to focus on three major things. Keep it simple. When it comes to comp, I've been in this space for about 15 years on the software side, automating comp solutions for companies of all sizes, which I'll talk about in a minute. But it's really keeping it simple and easy to understand so that they have the right focus. You want to reward performance and drive right behaviors. The whole idea of paying compensation, variable compensation, is to drive the right behaviors. And then finally, you want to put in the appropriate mechanics of what you're trying to accomplish. And I'll talk a little bit more detail about that when I talk about our actual comp plan structure. So for us, we're a typical organization. We're focusing on four major things: customer adoption. My team owns all of the renewals as well as the majority of the add-ons. We do about 90 to 95% of the add-on business within the customer base, as well as customer references. So really understanding our customer base and who's happy and who's not, and telling the different success stories and the value that they're getting from our solutions. So to put it a little bit into context, Xactly is a late-stage startup. We've raised close to $80 million. And to give a better understanding of the team and the types of customers that they're working with, I thought I'd just break it out. We have three different tiers: enterprise, mid-sized business, and SMB. And the logos on the right gives you a sense of the types of companies. So as you look at the enterprise, it's multinational companies with complex structures, and in just trying to work with these individuals, you can see how the customer success person that's managing these accounts really is a different type of profile than, say, a person that's managing the SMB business. Xactly, like I said, has been around for 10 years, and we automate comp for sales professionals, but we also automate comp for folks that are on MBOs, so any sort of management objectives, and we can talk a little bit more about that when you guys are ready to automate your compensation, putting in a shameless plug. So our current compensation model, as well as the team model, is, I think, pretty typical in the industry. We do an 80% base pay and 20% is variable. And we have two types of roles. We have customer success reps, and they're really focused on adoption, but their day-to-day interaction is making sure that the companies that are up for renewal are renewing, and they're trying to find new opportunities for add-ons and such. The customer success managers, they're dealing with our largest accounts and trying to preserve the revenue for our real big enterprise companies. So their focus is slightly different. They're obviously focused on the renewals and add-ons, but because of the amount of accounts they're managing, it's a much smaller amount. They're focused on blueprinting success. So how is that customer using our application and making sure that they're hitting all the right milestones to make those customers successful. And in certain situations, I know Nick was talking about it earlier, depending on your strategy, we have a big land and expand strategy. So we could get a company like Honeywell on board as a customer, and over time, we will grow throughout that company and go either international or go into different divisions of that organization. So their focus is really to get that first company up and running, that first division, and then being able to expand. So the focus of the comp is a little bit different, and I'll show you those two structures here in a minute. When it comes to the customer success reps, the plan components really fall into three main areas. So 30% of it is on the corporate plan, and our corporate plan really focuses on three measurements. It's MRR, churn, as well as EBITDA. So this gives the opportunity for the individual, whether they're a CSR or a CSM, to really focus on things that will help the company. So when they're out there taking a customer out to lunch, when they're doing different things that include their expense, corporate plan really helps them because they're thinking about EBITDA, because that's one of the bonus areas that we have. So they're going to be fiscally responsible with our budget. The other two areas they have a lot more control over, and that's the add-ons and the renewals, and we split those in half. So the 70% of their variable pay is half and half on renewals as well as add-ons. The incentive plan type is percentage to goal, and at the beginning I talked about the objectives. One of the main things that we want to focus on is making sure that we pay accelerators once they've hit that, what we call the excellence mark. So when we believe that they've hit that excellence mark, we believe in paying them for that performance and paying them well, because you want them to overachieve when they're doing something spectacular. Our performance period, it's a mix of year-to-date versus quarterly. So the churn number is year-to-date, just because there's different accounts that are up for renewal throughout the year, and it's not fair to penalize them based off of what accounts are up for renewal. So we run that churn metric year-to-date. And then for the add-ons, we do that quarterly. So we hit the reset button every quarter with whatever that number, that target is. And then finally, our payment frequency is quarterly. For the CSMs, it's slightly different. Same component breakout, meaning they're also on the corporate plan, 30%. Their 70% is focused on MBOs. And I mentioned this earlier, they have a smaller set of customers, so they're really focusing on customer strategy and making sure they're meeting with their customers on some sort of cadence. For these types of customers, these size, it's a weekly type touch. They're focused on the renewals for those specific customers that are coming up for renewal within this fiscal year. And then they're also in charge of customer success program assets. Because of the size of their accounts, they're working on building out the assets for the team, and those roll downstream so that we can take advantage of them and leverage them one-to-many for the SMBs, but then really the high interaction for the high touch falls under the enterprise area. Their mix is percentage of gold, and they have some things that are just binary. Did they do it or did they not? And same mix of year-to-date as well as quarterly, and the frequency of payout is quarterly as well. So the last thing I want to talk about is just lessons learned over the years of doing this. Being in the comp space, we also have some best practices. You should never comp more than three variables on a comp plan, especially when you're using MBOs. Any more than that, it just gets too convoluted. Use concrete metrics whenever possible. You want to define these so that they're not gray. And anytime you can use a metric, a number-driven way of variable, I would highly suggest that. Also, introduce quarterly strategic themes. So what we like to do, for example, this quarter is our user conference. And so our whole goal is to get customers in attendance. So next week, in fact, we're having our user conference at the Hyatt in San Francisco, if you're interested in joining us. And that whole quarter was all based about running some spiffs with the customer success folks to make sure that they're getting folks there. So we always want to have some sort of strategic theme each quarter. And then finally is create these plans quarterly or biannually. And that lesson is more about don't be afraid to try things. Don't feel like you're attached to the plan for the whole year. If you want to try something, run a quarterly plan. And finally, something we did that was interesting this year is President's Club eligibility. This is going to take a little bit of work, but I think you really should talk to your executive president. So whoever's running President's Club, whether it's your CRO or your CEO, or if you have a president, it's really impactful to get the folks that really performed well in the customer success group to club. This year we got 3 folks there from my organization, and I believe their loyalty is going to go through the roof based off of their experience. They did a week in Cabo, and it's fantastic to be able to sell the executives that these folks have an impact to the business because they're keeping revenue and they're adding revenue.
Terrific. Thank you, Bernie. Now we'll hand it over to Chris Sirosky. And for those of you who are familiar with the alphabet, Chris Sirosky, customer success. His mother was thinking about customer success many years ago when he was named, so we can remember Chris's name. Chris, take it away.
Thanks, Jeff. Good morning, everyone. Just a bit first off about my company, Dynatrace. Interesting what we're going through right now. Jeff introduced us as the best APM solution. I certainly feel that way. Our competitors might disagree, but we're a company that's actually got a 40-year history. We were originally part of a company called CompuWare. CompuWare went private in December of last year and effectively split into 2 pieces. One piece is the legacy CompuWare company, which is focused on mainframe software, and then Dynatrace, which is focused on the application performance management. So it's kind of interesting and exhausting in the same breath going through this transformation because a lot of the legacy things we did as a publicly traded company we're re-engineering as a privately held one, compensation being one of them, and trying to rewire everything up around new goals and objectives and not necessarily having all the systems in place to support that also creates some challenges. So I've been involved in a number of different roles, not just customer success in my tenure with CompuWare, now Dynatrace, and particularly around compensation planning, not just in customer success, but in pre-sales engineering and our services function. So I've had a chance to try a lot of different things and also make a lot of mistakes. So I try to summarize for you kind of my perspective on the whole compensation planning process, and it is a yin and a yang. When you sit down and you have a customer success team and you're thinking about how you're going to do compensation, right, you've got the balances of what the business needs insofar as a return, right? What's the cost for your team versus the return they're going to get based on the focus on retention, right, and the monies you're getting from that? How do you align them with strategic objectives or initiatives that the company has? Regional nuances. I'm big on that one because I've lived a lot of hard lessons, and I'll talk more about that. But obviously too, and I think of this as kind of a micro thing, when you're incentivizing somebody around compensation, you know, how do you get them positive about the plan, right? How do you get them motivated by the plan, that they think the goals are achievable, that they're realistic? And likewise too, how do you tune it so that you're not creating some dysfunction or maybe some internal conflict or conflict with external partners? How do you make sure that you try to nullify that, right? So, and then again, the financial reward part of incentivizing someone, it's a challenge. And you know, thinking about all those angles and trying to get to to a place that works isn't always very easy. In terms of the way we're doing compensation, and again, considering what's happened to us in the past 6 months, we've got a lot of different things going with regards to our product portfolio. We have multiple products, both SaaS as well as on-premise. And obviously, for those of you who have experienced products of those nature and the retention process, it is different. There are similarities, but it is different. So trying to make sure that we've got a proper balance there, something I'll key in on a little bit, but that's part of our plan. That's about 80%. We also look to spiff our people on services. What we find in our space is that our customers may not have the bandwidth, may not have the talent in their staff to wield the technologies, right? Because they've got so many other things going. So we try to spiff our CSMs around looking for opportunities to open up for our services function. Team versus individual goals. My experience has been that when I can find a good balance there and an emphasis on team, it makes it a lot easier for the person administrating the plan. And some of you may view this as a bit unorthodox, but when you have individual goals where you give CSMs individual accounts, it makes tremendous sense logically, but what I've seen happen, and I learned this the hard way with my pre-sales engineers, you create also a challenge with regards to when you have like splits and trying to referee like, well, so-and-so took over this responsibility when that person went on vacation, and who deserves credit for this based on timing and things. So I've always looked for a way of trying to emphasize the team side of it as much as possible, but also rewarding the individual behavior, particularly through spiffs. I've got 45 people spread out across the world, and so a lot of them share geos. So it's worked out well for us. I mean, the great thing I think that we've been able to accomplish is building a team that really looks to share and help each other, right? That dysfunctional conflict has really been nullified. Balancing the components, again, when you have SaaS and you have on-premise, on-premise tends to be a little bit easier, SaaS tends to take more heavy lifting. The challenge that I've been seeing or that I've experienced is that when you're spread out across different geos, and so you've got market penetration with one product line that you don't have in the other, trying to make sure that that product line doesn't get lost in the mix, right? Weighing the components differently. Also, again, trying to make sure that what you're setting up aligns with sales targets. Maybe the sales goals are to grow that somewhat nascent penetration you have with that specific product. So, a lot of trying to figure out a nice calibration, right, so that you're achieving those business objectives. I think for me, the lessons learned here, just a couple things. Consensus is achieved at 80% tolerance. What does that mean? Well, there's a famous comedian who I won't mention his name because he's a bit controversial now, but he's credited with saying something along the lines of, the best way of angering everybody is trying to please everybody, right? And what I found with comp plans is that, there's always going to be people that get focused maybe on the edge cases, the what ifs. Well, what if this happens, right? What if my dog eats my comp plan, or what if this happens? I try to calibrate myself in knowing that if I get like 80% buy-in from the team that's using it or that's under it, I know I've done my job, right? Obviously, I've got to make sure that my management team is comfortable, but I kind of look for that, if 80% of the people are checked in and they believe that it's achievable and that it's financially rewarding, I've done my job. Engineering for effectiveness also means efficiency and execution. Just as Bernie said, keeping the components simple, understandable, right, also makes it easier to make sure that things get paid on time, that exceptions processes are as streamlined as possible. The global aspect, I've learned the hard way. Make sure if you've got a global team, you really understand local HR, labor law, implications with regards to these plans. Some countries that we deal in, if you change OTEs, you can only increase them. You can never decrease them, even with spiffs. So if you've experienced that or you're aware of that, you got to be really well understood on what those countries allow. Your partner distribution network. We do a lot with partners, particularly in Asia Pac and Latin America. Our CSMs try to work closely with those partners and again, making sure the goals are aligned and making sure that the behavior of the CSM, of course, aligns to the partner achievement, right? So that the partner can be healthy. That can be a bit tricky sometimes, right, when you're sharing that customer. Always analyze. I love Bernie's idea of quarterly plans because you can spend the time and look at what's working, what's not working. I know we're going through finalizing our plan for this year now, and I did a lot of analysis from last year, and it really helps me think through, okay, did that component work, and does it line up to where the business wants to go this year? And then finally, and just echoing Bernie again, the budget for spot bonuses or spiffs, make them fun. It doesn't have to be extravagant. I try to do fun things for the team where it's like, here's a gift card, go take your better half out for a nice dinner. That to me makes a lot of a difference in terms of building esprit de corps.
Terrific. Thanks, Chris. We've got a few more slides, but what I'd like to do is to open it up to questions in a minute. And so if you have questions, why don't you come to the aisles? I think we have people with microphones. So you can come up to the microphones and we'll start the questions in a minute. But first, let's go through some slides here that we have about compensation. And we've done a survey of, Gainsight's actually done the survey of customer success industry in terms of what are the compensation parameters of the staff within the customer success teams. And Bernie, would you like to start, just talk about your observations about these?
Yeah, it's interesting. Especially the customer success side of it, where it says that 1 to 3 years is really the median. I think customer success has been around for a while. It's just taken different names, whether it was account management. Back in the early 2000s, just a quick story, I was a sales rep for a software company. It was an on-premise software company. And my territory was every company that was, I believe it was 200 sales reps at the time, but they were growing to 1,000. And so the thing was, it was 2000, things were great. 2001, things turned. All those companies were not doing so well. They weren't going to be 1,000, so it was the vignettes, the redbacks, those types of companies. So I was asked to create a customer advocacy role. So I became the first customer advocate. At the time, I thought it was a demotion, but it turned out to be the best thing that ever happened to me because I got the opportunity to build a customer advocacy group, which over time evolved into customer success. But that advocacy group, it was one of those things where you went in, you talked to companies that owned software on premise, and you tried to talk them into upgrading and spending thousands and hundreds of thousands of dollars, where in today's model, it's just turn on the features and let's figure out how to make you successful. So it's interesting that it's been around for a long time. We're just in a stage now where we have the power as individuals to make these companies successful because of the way the technology is delivered. So that's probably the most interesting thing is they've been around for a while, and because I've been in this space for, I would say, 10 to 12 years, but now it's an opportunity for us because we can really move the ball forward without having professional services get involved, doing major upgrades, doing things that were out of our control in the past. So all we could do was be a customer advocate. We couldn't actually make them successful.
Let's take a look at this slide here about the compensation by level. Chris, do you want to take a look at that and see how does this resonate with what you've seen?
I love this slide, and I love it because today I had a meeting with my management team and I used it, so I want to thank Jeff for timely delivery there. I think as the industry evolves, and some of the things that I'm seeing that certainly correlate to this is that the complexity of the organization that you're in, and insofar as multi-product, large portfolio obviously plays into this. But I think it highlights the fact as well, going to Nick's excitement this morning, that this is a job function, a career path that is very lucrative and very important. For those of you who saw the presentation by the gentleman yesterday from TSIA, and he talked about revenue streams, I think, related to large enterprise companies, how they kind of bottomed out and kind of correlated with the acceleration in this insofar as customer success growing as a function. I mean, it all adds up, right? So, for me personally, when I look at this, it really makes sense to me, and it's really helping me fortify what I'm trying to do with compensation and making sure that people are seeing that this is an opportunity that's worth their while. Talented people that have a desire to work with customers to make sure that customers are achieving value. It's not only fun, but it can be lucrative.
And then this last slide here, showing the variable comp levers and whether people are bonused annually, quarterly, or monthly. It looks like a pretty even split between annual and quarterly. Now you were saying earlier backstage, Chris, that you comp what is your comp bonus plan for your team?
We do it on a quarterly basis.
Yep. And Bernie?
We're also quarterly, and I think if you could do monthly, great. I think quarterly is a better cadence. Annually is tough because you really want to reward people closer to the event. So I would be bummed if I was paid annually for a bonus. So I think you really should think about quarterly. If you can do monthly, great, but I think the maintenance on quarterly is perfect. It's a good cadence. The other thing I'll mention is all these variables are excellent, and what you will find if you're new to this, you might want to add all of them to the comp plan, but it goes back to what Chris and I both said. Just pick 3 or even 2 that are really important to your company at the stage you're at. So if it is NPS scores and you want people to really get in there and actually answer those questions so that you can understand how your customer base looks, pick that one and pick another one, but don't try to do more than the human on the other side of it that's managing that comp plan can comprehend.
That's great. Well, thank you very much. That's terrific presentations. We do have time for questions from the audience. Don't be shy. Any questions? It's hard to see up here with the lighting. Over here. Can you get a mic? Is there a mic back there, or who has it? Somebody have the mic?
Here he comes.
And if other people have questions, just come to the front here on either aisle, and then we'll rotate back and forth.
Thank you. Just starting a customer success practice and finding that some people do not want to be incentivized. In other words, I find that some good candidates for customer success are people who didn't really like the pressure of sales and therefore are pretty reticent to work under that kind of structure. Do you think there's a place for that? Do you think there's a place for a purely fixed compensation structure for a customer success manager, or do you think it really needs to be incentivized?
So it's interesting to rephrase that question. There may be personality self-selection. The kind of people who like to go into customer success have a different personality profile from the people who go into sales, and therefore, how do you think about incentive compensation, team versus individual compensation? Bernie, why don't we start with you, and then Chris, your comments.
So it's a good question, and I think it depends on your solution and what you do. Because if you have a customer success manager that's highly technical, and their job is to make a customer successful, and they're going to be going in and really working with the product, a pure salary type compensation structure might make sense. But in most cases, I think having a portion at risk is valuable to you and the company, so you can really drive certain behaviors depending on the period of time. I, like Chris, also believe in team goals, because no territory is created even. The customers are always different, so I always go with the team goal. It makes life so much easier and everybody's motivated.
Yeah, not much that I'd add to what Bernie said. If it's somebody that's focused, it really boils down to how do you evaluate their performance. I definitely see that, and we're trying to do these things where you have a stratum of your CSMs who are very technical and are more working with the customer at a lower level, but they're not necessarily trying to emphasize their actions around the renewal. They're there as more of a technical source. That would make sense to me. But at the end of the day, the way you're showing their value, right, to the organization is based on the renewals, based on an attainment level, based on NPS scores. So there has to be some objective metric.
Great. Question over here.
Good morning. I was here yesterday and intrigued to hear the Intact team talk about timeliness of renewals as something they really focused on and in fact penalized against if renewals didn't come in on time. Curious if you have any penalty clause.
Sorry, could you put the microphone closer? It's hard to hear.
Sorry. Curious if you're using any penalty clause for your customer service or customer success teams, or if you have any thoughts on that. So, are you focused on the outcome itself or timeliness in addition to the outcome?
So if I'm understanding the question, is it that are we compensating based on not only the renewal, but also based on the timeliness of the renewal? Is that a fair summary? Yeah, absolutely. We call them stragglers, right? The renewals that come in late. And we do try and calibrate the plan so that the incentivization is for a timely renewal, right? We want it on time. We obviously want to make sure that we maintain our revenue streams, and our plan is based on that attainment. So there are some things that we do in terms of if they come in late, I'll call it a penalty charge, right? Depending on how far out it goes. Excuse me. I will say it's challenging to do that, though, in certain geos where we tend to see a higher volume of stragglers, just because of the complexity of the distribution channels. So, we try and tune around, well, we expect a higher strag amount here because of how we have to deal with partners. It is something, though, that I think is important that you are emphasizing the timeliness, right? Because that maps to what your CFO wants to see insofar as your revenue run rate.
Great. Next question.
This is a bit of a follow-up to the first question, but when maybe you're starting a younger customer success organization, you're building out for the first time, wanting to be metric-driven, how do you balance that with setting those goals? If there aren't historical baselines within the company, how do you determine what the CSM's targets should be? Obviously wanting to properly evaluate success, but also retain talent by making them feel it's achievable. How do you set that when you might be doing new initiatives or no baselines or contracts that are a year out from renewal? Curious on your thoughts on that.
So
I'm going to add a question, sort of an add-on question to that, which is if you quantify it, what is the optimal percentage of customer success people making their goals? Should 100% of the people make their goals? Should 50%? Is it some other number?
Yeah.
When you set your goals, what are you trying to achieve?
Because of the role and the impact that they have, I don't really want to be 80% or higher making their goals, because that's the type of job.
You don't want to be higher.
80% or higher.
You do want to or don't?
Do.
You do want to be higher, 80% or higher.
Do want them to be making it, because you're giving them goals that they have a lot of control over, versus sales is slightly different, where you are really finding the lead, cultivating it, and getting it closed. These are already there. Now it's up to you to put the right focus in place. One of the things I would say with early teams, and you want to keep them motivated, you have to define the metrics you want to measure. But if it's just reality as you don't have any data, then maybe focus them on some programs that is going to get you there, and put some numbers out there that you want them to try to achieve. You might not be paying them on that. I would pay them on the effort to start getting the programs in place and the processes in place, so that the following year everything is set up, yet they're feeling incentivized, and they're collaborating on, okay, how do we want to do this so that we're all efficient and we have measurements that we can actually achieve and attain, and you start working together as a team. So I would set the goal. You might not want to pay them because you don't know what the outcome's going to be, but then really figure out the process that's going to drive to that goal.
Great.
Yeah, I would just simply add, in song what Bernie's saying, an MBO focused around like getting to a process, building that and making it so that you can execute against it, you can show demonstrable progress. That would be a good place to start. So then you can start looking at objectively where you're at today in terms of the benchmark and where you need to grow to.
Question over here.
Yeah, great session, very helpful. Two questions. One is a quick one. Percent of folks on the team that should qualify for President's Club. We just introduced that. We did 20% essentially of the team is going to qualify. Wondering if you've got any comments or best practices. Second question relates to team versus individual. And in quick backdrop, we just moved from a 100% individual for the first half to a 100% team-based approach for the second half. And basically you framed it as, well, it's going to be 50-50 for the year. Tempted to go with 100% team for 2016. Wonder if you've got any views or comments on that. Thank you.
Bernie, if you could comment on that to start, but also to reflect on something you said earlier about the idea of experimenting.
Yeah.
That when you're a young company and you don't have everything set, it's an interesting idea. idea.
Yeah, that's actually a perfect segue to try it. Don't say that this is what we're going to do for the whole year. Just try it for a quarter, see what happens. If you like the results, take it, extend it to the next quarter, and so forth. So let the folks know that you have the opportunity to change it. I like that you changed it to team. I truly believe that's the way to go. Individual goals start moving towards that sales mindset. So doing the team is you're going to find you're going to get more bang for your buck.
But you're recommending, actually, for most cases, a mixture of team and individual, right?
Yes. Yes.
What would in your case, in your company, what do you do? What's the mixture?
So the team part of it will be the metrics. So the goal, the churn number, the add-on number, that's all team. The individual will be certain things that they're going to have a deliverable at the end of that quarter. And for us, it would probably be of that 70% that we talked about, 30% of it that's outside of the corporate bonus would be tied to that individual piece where they have that deliverable. For your club question, I think that's a good number, 15 to 20% of your top performers. I'm impressed that you got it done. I find that when I talk to other peers that it's still a discussion and it's not reality, so good job on that.
Question over here.
Hello, yeah. So regarding that last slide on compensation and the variable comp, I saw the retention was the number one choice, and book of business or revenue was very, very low. Is there some pitfall in variable comp focused on the total book of business? Or is it, any comment on that? I mean, maybe that was a Gainsight survey. I don't know, but
I think that was the survey slide.
Yeah, that was the survey from Gainsight across several hundred customers. So the question is, which is more important, dollars of essentially upselling versus retention? Is that what the question is?
book of
Yeah.
versus retention. Like the book of business was a very low. I don't know if you can bring the slide up, but book of business was very low, and total revenue was very low in terms of one of the choices, and
Right.
retention was number one. Just wondered if you had a comment on that.
Yeah. So that was the survey responses that the customers that responded, that was the way they managed their business. Opinion-wise, I think retention is still higher than book of business, because at the end of the day, that's the overall number that if you're public or private, that's what you're reporting to the board, and they want to know where are your customers staying with you, and if not, why, and how are you going to go fix that problem?
From a financial point of view, the key metric is the net retention. So it's if you have 100 customers and you lose 10 of them, so you're down at 90, but those 90 spend 30% more, so you're roughly at 120. It's going from 100 to 120, which is the key metric that investors look at. And we have time for one more question over here. I'm sorry for the people who are waiting in line. You can try to get us afterwards. We'll be back in the room back there. Yes.
Yeah, so I think that it's been spoken about in a couple different sessions, but obviously there's a lot of competition in terms of actually hiring. So when you start to think about the compensation plan, what do you guys think in terms of just like minimum base salaries for New York or San Francisco to meet that minimum threshold of living to start as like an associate or that first level into the customer success world?
So the question is about minimum base salaries, and Chris, I think you're going to advise everyone to open up an office in Detroit, right? where
yeah,
you
come
are.
on down to Motown, cheap housing. Yeah, I mean, we also have a group of our team that's based in Waltham, Massachusetts, which is also pretty expensive. I think you have to work with your recruiting agencies to understand what the market bears. But in these hot markets, right, it is what it is. We do have a number of people in Detroit, and that's helped a lot. In terms of, and Nick talked about this too, in terms of building the customer base, I should say building the recruiting base, what's worked for us really well is we do a couple different things with regards to university recruiting. Getting kids out of school, training them up, giving them some customer-facing experience, and then matriculating them into different roles. That's worked splendidly. And as a graduate of Accenture, or at the time Anderson Consulting, who had a similar program, I find that an invaluable source of people, because not only you're getting a cost that's realistic, but it's not just what you're paying the people. You want people who are motivated. That's worked really well. So I don't know if that helps, but that might be something to look at too.
So Chris, in Waltham, for instance, do you have a number of what's your starting compensation of your customer success
Yeah,
team?
so I think when we're looking at Waltham, we're somewhere close to 6 digits, right?
For the associates?
For the customer service manager.
for the entry level. You asking for the manager or the entry level?
Entry level.
Yeah.
So
Entry
100,000
level.
for the manager.
Yeah, I mean, for an experienced person, it's about 100K. For an entry-level person, we really haven't gone out and hired somebody who's not done the job before, right? If we're going to bring somebody who's entry-level, we've matriculated them in through our professional development program, and they're paid anywhere from 70 to 80 in base salary.
And what about in San Francisco, in the Bay Area?
50 to 70 for the entry level, depending on their experience. But we do the same thing. We are big believers in, because this is a new space, I'll contradict myself a little bit because it was different functions in the past. Because it is a new space, you can get college grads, smart kids that you can, that are malleable, and you put them in that role, and you can start them in those ranges, and it's worked really well for us.
Great. And I think Gainsight has statistics on this, so you can ask your Gainsight contact for benchmarks. Last question for both panelists. If there's one thing you want people to remember when they go back to the office about customer success and optimal compensation, Chris, what would it be? What would you recommend?
Mine would just be, for those of you who know Stephen Covey, begin with the end in mind, right? Make sure that your objectives, your business objectives are, or that your comp setup is in direct alignment with your business objectives. That's the key thing. If you're centered there, you'll do fine.
And Bernie?
You probably appreciate this answer since you were previously a CFO. I would think a lot of people have this view of customer success as being a purist, that you're on the field for the customer. I would say go back and make sure your comp plan has some sort of revenue metric, whether it's renewals, whether it's add-ons, because it makes it a lot easier to justify to CFOs why you need more headcount. So take a little bit of that sales piece of it and add it to your plan, because this is becoming a critical role for SaaS companies specifically, or subscription-based companies, and make it closer to sales, but not sales, but you have a component and a metric that the CFO can appreciate for the amount of revenue that you're saving the company, because the cost to go acquire those dollars are high. So that would be my suggestion.
Terrific. Chris and Bernie, thank you very much. Please join me in welcoming and thanking our panelists here.